Hello, everyone. So we're starting this session. Welcome all the joiners here. This session is about timing the market exit and entry in a volatile market. So first of all, I'd like to welcome everyone, and thanks to SGX and Investing Notes for organizing this great event. My name is Keith Chan, and I'm from Societe Generale, who looks after the listed products distribution for Asia. And today, joining with me in this session, it's Robin Ho. He's from Phillip, and he's a very experienced trader in the market who trade actively in one of the products that Societe Generale issues on SGX called the Daily Leverage Certificates. So perhaps I will share my screen now and start the session. I'll take the first 15 minutes to talk a little bit about the product, and then I'll pass it on to Robin later on, where he will share with us his trading strategies. So let me share my screen. Okay, so today I'm going to talk to you about daily leverage certificates, or they are called DLCs in short. We are very excited about this instrument. It has been launched first time on the SGX in 2017 in July. It was the first product, first of this type of listed products in Asia at the time. And but daily leverage certificates are actually a product that was quite popular in Europe, where Societe Generale was one of the issuers of this instrument. And if I may just share a quick background, like how this product came about. It's I think in the about more than 10 years ago. We are one of the biggest issuer in ETFs. And a lot of the investors like yourself, you probably heard of leverage inverse ETFs, which gives you a fixed leverage on the daily performance of the underlying index that it tracks. The leverages goes from 2 times to 3 times. You have long and short. But the problem with fund as a wrapper is that there's some limitation on the level of leverage that the product can provide. So about 10 years ago, Societe Generale was thought of the idea of launching a similar payoff, but with higher leverage in the form of a certificate to be traded on the European market. And these products was the DLCs, where we offer daily leverage of 3 times upwards to about 15 times even on some of the broad-based index, with long and short instruments for investors to trade. Now, these products in the listed space with leverage has become a very popular product among European investors. In fact, the volumes of DLCs have exceeded those of warrants. So purely because it's a simpler product to trade, it's easier to understand, and it's easier to choose the right instrument for you to trade as a trader. So I'm going to go into the product itself. I think for daily leverage certificates, the first thing you need to know is that it's a leverage product that tracks an underlying, for example, the HSI index, the Hansen Tech index, as well as some single stocks that we have launched, like Chinese tech, for example, Tencent, Meituan, Xiaomi, and some of the Singapore stocks, which I'll go over with you later on. So it tracks an index, and it provides a return with leverage based on the daily performance of the underlying. Okay, so we look at the daily return of an underlying. For example, if a single stock moves up by 1% today, then a 5 times leverage long DLC would go up 5% in return. So the key point here is that it tracks the daily performance of the underlying with leverage, and it's traded as a certificate on the SGX. So what does that mean? So each DLC has its own unique trading counter, like a stock where you trade looking at the right product with the counter, and then you'll see a bid and offer for that instrument where you can trade it using your same share account with the SGX. So the fixed DLCs, another important factor is that it provides a long certificate as well as a short certificate. So for active traders like yourself, all right, you sometimes have a bullish view on underlying, but if you do want to take a bearish view, a short certificate will give you that inverse performance of the underlying asset with leverage. So for every product, we have got 5 times long, 5 times short for the single stocks. And for the index, we have 3 times, 5 times, and 7 times long and short certificates that you can choose from. Okay, so importantly to note, it's traded like a share on SGX, very easily accessible, and I'll later on show you our website where there's a very good search engine where it can help you to pick the right product and instrument for you to trade. Now, what's important to note, especially on the Hong Kong exchange markets in the last couple of years, is a lot of big mega Chinese tech companies have came to Hong Kong for listing. And it started back in 2018 when Xiaomi came to launch IPO in Hong Kong Exchange, and then we've got Meituan, Alibaba, NetEase, and so on. And more recently, the Kuaishou in the beginning of February, very successful IPO there. So all these Chinese tech stocks have in fact become very important underlyings for listed products. And what we're very exciting to have done is that we have launched a lot of DLCs that track these Chinese tech companies that are listed in Hong Kong. So what that means for you as an investor is that using your SGX trading account, you can trade DLCs that tracks these Hong Kong listed Chinese tech with leverage of fixed of 5 times, and you can go long and you can buy short certificate that gives you the inverse relationship of these stocks. So with Sing dollars on your Hong Kong, with your SGX account, you can have exposure to Hong Kong tech stocks. And the recent 6 to 8 months, we've seen a lot of volumes, a lot of investors' interest on DLCs that track these names. Obviously, these Chinese tech stocks are also quite volatile. They can move 5-8% a day, and with DLCs of 5 times leverage, you can get the products fluctuating 30-40% in value in a day. So, obviously, there's a certain risk that's linked to that, but I think what's important for an investor is how you use the instrument, understand it properly, and how to control the capital that you put into these leverage products to control your risk. So for example, we got 5 times leverage. So if you're about to expose a stock of let's say 10,000 Sing dollars to trade a single stock with a 5 times leverage, if you put in 2,000, 1/5 of that capital, it gives you the equivalent exposure of 5 times, which is a 10,000 equivalent on the stock. So one of the things of using DLCs is you can use make more efficient use of your capital with less capital to gain the same exposure in the underlying. And another key point here is that to trade Chinese tech stocks in Hong Kong, one bot lot can cost you 50,000-60,000 Hong Kong dollars, which is 8 to 10K Sing dollars for one lot to trade. But with DLCs, every bot lot is 100, and they trade in a price of around between 50 cents to some $2 to $3. So a few $100 Sing dollars as a minimum bot lot size, you can have access to these big cap stocks that are traded in Hong Kong. So currently we've got 171 DLCs listed on SGX. So they tracks both Hong Kong underlyings and Singapore underlyings. In the Hong Kong index, we've got HSI, HSCEI, as well as the recently launched Hansen Tech Index that we have DLCs on, as well as 30 stocks in Hong Kong. If you look at the popular stocks ranked by turnover in 2020, they are mainly the tech stocks. So we've got Tencent, Alibaba, Meituan, Sunny Optical, so as Geely, where we have 5 times long and short certificates listed on the SGX. Now, a word about the Hang Seng Tech Index, which we've launched recently on DLCs. Hang Seng Tech Index is an index that tracks 30 largest technology stocks listed in Hong Kong. So they include stocks like Meituan, Sunny Optical, Tencent, Alibaba. So if you want to trade this sector as an index, you can also look at 5 times long DLCs and 5 times shorts. If you look at the yellow part there, the counter for the Hang Seng Tech 5 times long is CXDW, which is the counter that you can trade on if you have a bullish exposure on the Hang Seng Tech. If you have a bearish view, you can look at the CWEW, which is the Hang Seng Tech 5 times short, which will give you an inverse return on the underlying with 5 times leverage. So looking at every instrument on our website, we've got a product page that you can always go and look up. You can see that what you should know is that you can see the the stock code, DOPW, the product name, 5 times long on Ping An Health, which is a stock also listed in Hong Kong, 1833 stock code. So you can see every day you can see how the performance of the underlying return. So this stock was up 21% on that particular day. And with the 5 times long DLC, which is trading at 70 cents, it was up 104%, which is approximately 5 times the daily return, the daily performance of the underlying. So this DLC was closed yesterday at 34 cents. So when you trade DLC, you're basically buying it like a share. So you say you bought it at 34 cents yesterday, today the stock's up and the DLC is trading at 70 cents, you can just sell the DLCs at 70 cents and capture that return, which is linked to the underlying daily performance. So what DLCs are, I'm going a little bit more into detail. I won't go into too long on this because later on I'll show you where you can find all this information on our website. But basically, DLCs has a term sheet. Every product has a term sheet that states the formula of the product's performance. And the formula, in summary, goes like this. Basically, it's the daily percentage return of the underlying asset times the leverage, let's say 5 times, and it will give you the daily performance of the DLC. Okay, so let's say DBS at $25, let's say it's go up 2% today. At let's say 11 in the morning, the stock's trading 2% up from yesterday's close. The DLC would be trading with a 5 times long, will be trading 10% up from previous day's close. So if the previous day close of DLC is $1, the product will be trading at 110 at 11 o'clock. So the pricing that we SocGen is also a market maker for these DLCs, where we will quote a bid and offer in real time that tracks the real time value of the DLCs on the exchange. So you'll see a bid and offer on the screen where you can trade the product. So how do we use DLCs? Basically, you can day trade, right? You can buy and capture intraday short movements of the underlying or the index. Swing trading, which I'm sure Robin later on will share his experience on that, as well as hedging, because you've got the short DLCs that you can hedge a portfolio of stocks in case there's some short-term downward movements. You want a quick and easy access to short. This will be a very good instrument to look at. Quick comparison on this product versus other leverage products available in the market. So DLCs, similar to structured warrants, are listed on the SGX. You can trade leverage with CFDs. Obviously, that's an OTC product. One of the key points I want to highlight here is the maximum loss, maximum capital, because to trade leverage, the biggest enemy is you put in 5% margin, the market gap down 10% next day, and you have to you lost all your 5% plus you have liable for the other 5%. But with DLCs as well as structured bonds, the maximum loss of these products are capped at your initial capital. Meaning, if you put in $5,000 on a DLC, you'll never lose more than 5,000. Okay, so you've got on one side the leverage upside, which is unlimited based on the underlying performance. But on the downside, your worst case is you lose all your initial capital without the risk of further commitment or obligation on your position. So that's a very important point. And two things I'd like to highlight. One is a compounding return that investors should be familiar when they trade DLCs. And this is the same concept that you have to know when you trade leverage inverse ETFs. Although lower leverage, but there's still a compounding effect because we look at the daily performance of the underlying with a fixed leverage. And if you look at this example, basically in 3 days' time, if the underlying goes to $105 with 5.08 return, the DLCs, if the stock is up every day on a daily basis, the 5 times DLC will give you a return of 27%, which is actually more than 5 times. But if you've got the same scenario where the second scenario is where the stock also ended at 5% up in 3 days, but it took a different track. It went up and then went down 4% and up 7%. Your net result on the DLC will be less than 27% in this case because of this daily compounding. So it's a mathematical concept but you need to keep in mind when you hold DLC for a longer period of time that there is this compounding effect. And lastly, there's also this airbag mechanism. With a 5 times leverage long, there is for the single stock, there's an airbag trigger at 15%, meaning if the stock goes down by 15%, an airbag will be triggered intraday. And basically the leverage will be reset at that time, and then the DLC will resume trading afterwards. So there is, if you like, the airbag mechanism is a bit like a stop loss, or when it triggers, basically your exposure is being reset. Okay, so but the key thing though is if you hold along with 5 times, there's no airbag that will trigger on the upside. Okay, so this is more like a stop loss mechanism that's built into the product. SIP, so remember that you need to be SIP qualified to trade DLCs, and just if you give me maybe 1 minute, quickly look at our website. If you like to scan this QR code, you can. So basically, this links to our website, which is here. So if you could see on my screen, this is the website, dlc.societegen.com. So if you the 3 things I'd like to show you. So if you're using a mobile, you probably see a screen a bit like this, which is like the mobile version. So basically, first of all, at the bottom of the mobile version, you've got the product search and the subscribe to a newsletter. So if you pick the product search, you can here pick the underlyings that you like to look at, right? Let's say Alibaba, press search. And then at the bottom, you will see the result of all the Alibaba long and short DLCs that you can look at. Okay, so if you go back to the web page version, it goes like this. So otherwise, you can also type in the search bar here, Meituan, then you can look at all the Meituan DLCs. Okay, that's a quick search. And the last thing is I would encourage everyone to look at the educational section on this DLCs, which we have a lot of handbooks. If you don't like reading words, there's a lot of videos that you can look at that talks everything about the DLC instrument and how it works. Okay, so do subscribe to our newsletters, which on the mobile side is right at the bottom here, the subscribe button, and give us an email and let's stay connected. We're very excited to show you this product, the instrument that's been traded on the SGX, and looking forward to any questions that you may have on the chat. So now I'd like to pass the time to Robin, who's going to share with us his trading strategies and how he's been using DLCs. Thank you very much. Robin, over to you.
Sorry, Robin, you're actually on mute.
Okay. So can everybody hear me?
Yep.
Good morning, everyone. Thank you, Keith, for that great introduction to DLC. So my name is Robin Ho, and today or this morning, I hope to bring you some insights into how I trade DLC. So, I have a long history with DLC and Keith, all right, because when DLC was first brought to Singapore in July 2017, and just looking back, it's like, boy, it's about close to 4 years that DLC has been launched. And let me just tell you, right, me and my trading community, where DLC was launched, we were all very excited. And I can tell you that today we are still very excited about trading DLC. In fact, DLC has been one of that products, right? Asset class that we trade every day. All right, and what more to a class assets where you have not only liquidity, but you have lots of volatility, and that will present huge opportunity for traders. All right, so I want to stress that DLC is not for you to come and take your chance. All right, it's not like you want to go to casino and you look at DLC as something very volatile, something that you could make money, and you just want to make a pun. All right. So today I just want to tell you about my learning curve with DLC since I started trading DLC in 2017. Okay, so like everything else you do, all right, when you start trading a new asset class, whether it's going to be stocks, futures, options, DLC, call, warrants, you have your learning curve. All right, so today my job here is to be sharing to you my experience and learning curve that I have gone through, so that you too, all right, can just hop into the DLC wagon and be profitable and make lots of money from DLC. Okay, so let's start. So I want to start by doing a bit of boasting. All right, not really boast. All right, so you can see my profit here, right, from 1st of June to 15th July, right. So I traded on the 1st of June to 15th July, I latched on a very good story, and that story was about US trying to delist, announcing that they will delist a lot of China-listed company on Wall Street. They want to delist them, and the obvious place for them to go will be to the Hong Kong Stock Exchange. So I got bullish on Hong Kong Stock Exchange, and I figured out one thing, all right, the way to make the money from Hong Kong Stock Exchange is through the DLC. One of the best way, because the nominal value is not as big as the actual share itself. So I thought the best so the Hong Kong Stock Exchange DLC offer the best opportunity. So I invested in it and I traded in it. So this is my 1.5 months trade, right, on a contra. So I didn't really fork out any money. It was just like buying and selling within 1 week, and I made $98,000. Another story that I latched on was Geely. And remember, during that period, Geely announced that they intend to list on the Starboard Index. And you know that the Starboard Index on Shanghai, the PE ratio averages about 90 times. And at that time, Geely was doing about 20 times. So you could imagine, the profit potential you're going to get out of Geely. And I traded it on a contra basis, and I made $98,000. All right. So this is the objective of this is not to to be boasting of my profits, but the objective was this, right? As an educator and as an influencer in the trading scene in Singapore, you know, I want to lead by example. So I trade it and I tell you guys, okay, I made it, and I want to tell you how to make money from DLC. Okay, so so you can make a lot of money from DLC if you know how to trade it, and this is what I'm here for today. I want to be telling you how to do it. All right, first of all, some little background about Hansen Index. So today my focus really is on the Hong Kong stocks DLC. Let me tell you, you know, the Hong Kong stock DLC is, you know, it's like a gateway, all right, for you to trade the Hong Kong stocks, all right, listed on the Hansen Index. And a lot of them, you know, but they are global leaders. Now, let me tell you that. Okay, so, you know, so back then in 2005, you know, the big China stocks, all right, big cap China stocks, all right, they make only about like 41% of the Hansen Index. Guess what? Today it makes close to 79%. Think about the trading opportunity, all right? You know, today 79% of the stocks traded, all right, on the Hansen Index, all right, is made up of, you know, big global leaders, Chinese stocks. And, you know, the Hansen Index has been underperforming, all right, the world index. And therefore, you know, the Hansen make a major overhaul, the Hong Kong Stock Index. And yesterday, all right, yesterday they announced, all right, the three inclusion, all right, Alibaba Health, Information Technology, Longfu, Haiti Lao, all right. So, so we have three stocks, all right, listed, and obviously, you know, one of them, Alibaba Health, is listed. It has got a DLC stocks, all right. So look out for Alibaba Health, and also, all right. So when you're trading DLC, the first thing to look out for is sectoral play, all right. What is the fashionable or the favorite sector, you know, the investors are trading. So you could see, right, that you know, in the last 6 months, all right, the favorite sectors were the techs. Look at techs, all right, they were really outperforming all classes. They were outperforming the financials, they're outperforming the property, construction, telcos, and the financials. All right. And but then look at that, just in the last couple of weeks, all right, last 2 weeks, right, you see the techs were falling. All right, and the telcos, the traditional stocks, the telcos, the properties, and the financial, they were overtaking. All right, they're overtaking and outperforming the techs. So if you want to be in a DLC today, you want to buy, you know, like the long DLC. All right, you probably don't want to be trading the techs. You probably want to be in sectors trading the telco, stock, the financial, and the property. So the first thing to do really is to understand which sector is in play. All right, so these are the 30 Hong Kong listed DLC stocks. And let me tell you, right, as a trader, if you can just focus on these 30 DLC stocks, all right, you know, your hands are full. All right, you don't have to be trading any other thing because they are absolutely volatile, and you know, and has got plenty of liquidity because SocGen doing a very good job. All right, they provide ample liquidity. You are not afraid that there's no buyer, no seller. The quotes are always there. All right, for you to benefit from it, for you to buy, sell, take profit. You know, the market maker is always there. All right, and you have a great bunch of stocks. So for me, you know, every day all these 30 stocks, right, is on my screen, plus the Hang Seng Index and the new Hang Seng Tech Index. All right, so these are on my screen all the time. In fact, I trade this portfolio very actively. All right, and I was on the techs, and now I'm switching out of the techs. So I'm short on the techs, all right, and long on the financials. on the Hong Kong DLC. So because that was the favorite. So the first thing to understand is the sector, all right? And then the second thing, right, after you understand which sector is in play, then you want to ask, which stock is outperforming. All right, so this is a rebasing chart, all right? And you could see, right, in a couple of months back, all right, you could see that Xiaomi was outperforming the rest of it, in fact, just accelerating above the other stocks. You could see that BYD was the flavor, of the DLC Hong Kong stocks here. And stocks like China Mobile, the banks, even Alibaba, they were underperforming, and this couple of stocks were even beating the HSI. But look how things have changed. Okay, you see Xiaomi, all right, was like just now coming down very sharply, and so you don't want. If you want to be trading the DLC, you don't want to buy the long Xiaomi, all right, or you don't want to be buying. I mean, the Tencent and the BYD now, because they are in the tech sector. And this chart was just updated. It's lagging for about 4 days. Last Tuesday I updated it. So, but if you update today, you can see BYD, Tencent, and Xiaomi, their price, just coming down a lot. All right. So remember there are two things. All right. First thing to be watching is sectors. Second thing, when you get the sectors right, ask which stock in the sectors is outperforming. All right, so put them together, and that's so that will give you a clue. All right, what to trade. Okay, so let me give an example of DLC. How you can trade DLC, and the example today I want to take is a Tencent. All right, so just watch Tencent here. All right, from the start. All right, Tencent right here since 12 November 2018. So the share price was trading at 296. All right, it went as high as 400, and look at the profit you could have made, all right, from the Tencent DLC. So if you got Tencent DLC right here at 1.37 when the share price was at 296, and Tencent DLC rose to a high of Tencent rose to a high of 400, and the DLC would have traded at 602. All right, and that will make you about 400%. All right, about there. Okay, about 400 plus percent. And if you have just traded the stock itself, you probably made about like 30%. So can you imagine how much profit if you could have magnified, all right, in percentage term on the DLC if you get the trend right. Okay, so the secret is, right, when you're trading DLC, the minute you get the trend right, you are on the way to make good money. All right, so you got to get the trend right. All right, so you got to get a sector right, you got to get a stock right, and you have to get the trend right. So here, it's the Tencent was doing very well. It was on an uptrend, so you stayed on the uptrend until the uptrend breaks. So the minute the uptrend breaks, all right, this long DLC, you have to liquidate them. All right, so if you don't liquidate them, all right, it from $6 it can go to $2. Okay, so you have to get the trend right, and you try not to trade a DLC, all right, when the underlying shares is range bound. All right, so when range bound, don't trade the DLC. When they start trending up or trending down, all right, you can trade the DLC. So look at Tencent here, all right, at 332, and from here, when the price was 332, Tencent, the DLC was traded at 120. And if you have got the trend correctly and it was on the uptrend here, no doubt about it, all right, you could have made, all right, 10 times, 12 times, 12 times here. So up to today, all right, not today. So this was updated about 4 days ago. All right, Tencent has since fallen a little bit, but as at 17 February, all right, 17 February, you could have made about 12 times, all right. About 12 times, all right, if you had bought on at 120. So what I'm trying to say right here is that if you get the trend right, all right, DLC can help you magnify your profits. Okay, so this is HSBC. All right, so HSBC has been a stock that from here, from my chart, I track it since 9th May 2019, all right, for almost 1.5 years, 2 years now, and has been on the downtrend. It has been on a downtrend, but the point I'm trying to stress here really is that you have to be understanding. If you want to be trading DLC, you must know the trend, and here is the downtrend. All right, so even in a downtrend, all right, the broad trend can be down, but in between there will be trends, all right, that are sideways. And so when the price is trading sideways or range bound, most times, all right, you try to avoid the DLC. If you, like for example, a long DLC, most times they will be lackluster. They will not be making money, and and you will have a hard time dealing with it. All right, so not profitable. All right, so the minute you look at here, all right, the minute the stock starts trending, all right, that's where you start making lots of money. Okay, so look at HSBC here. It was trending down, and if you understand how to track trends, all right, so this was where, right, so this was where just like a couple of months back, all right, this was where the DLC started getting out of the trend. All right, so a very simple trend strategy, all right, in identifying when the trend changed, like here in HSBC, when HSBC start breaking up of the downtrend, all right, and if you can sense it at the beginning onset of a turn up, all right, if you have longed here, all right, the DLC, you could have made quite a lot of money riding the trend up. All right, so just look at it. I mean, if you have bought HSBC on 9th of May 2019, and that when the share price HSBC was 66.45 and the DLC was 176. All right, as of today, all right, so it was on the way down, and now the HSBC is trading $46, and the DLC trading $48. Okay, and if you have bought the DLC, you would have suffered a 73% loss, and the stock 30%. All right, so you don't want to be riding on a DLC, buying a long DLC. All right, when it is trending down. All right, so I want to say, all right, so there are 3 takeaways, okay, key takeaways that I want to be sharing with you, all right, for DLC. So first of all, when you're trading DLC, all right, make sure it is trending. All right, the second thing to do is that the trader must be able to spot when the trend breaks down, when it breaks up. So it's a break. So if it's an uptrend, when it breaks down from an uptrend, when it is a downtrend, when it breaks out of the uptrend, and you need to understand about reversal pattern. All right, so you should also know how to ride the trend. So TLC, if you don't know when, all right, the stocks breaks out or break down, all right, you can have an option now to say join the trend. So if the TLC is trending up, you can just join it, but you must be sure when the trend breaks and when to get out. So let me just share with you a very, very simple strategy. And for DLC, you don't need very complicated algorithm, complicated, strategy to make money. So you could see that a lot of these Hansen stocks, right? They are quite trendy. All right. So let me share with you, right? So if you are able to plot a simple trend like this, okay, like this. For example, this is a downtrend. All right, downtrend, a simple trend like this. All right, you stay short. All right, which means if you buy the DLC, you stay short until you see a break of the trend. Okay, so when the trend breaks, right, this is where you will take your profit on the shorts, and you may want to try to open a new long DLC. All right, so stocks are very trendy, and it's easy to plot the trend. There are so this is the most fundamental way of plotting a trend and knowing when a trend breaks out. Looks simple, all right? It is simple, okay? And let me tell you that it's a simple strategy in the stock market that wins, not the complicated ones, all right? So this is a very simple strategy. I've used it for years, all right? And it works perfect with DLC. So when the first break, all right, out of a downtrend is something that is the price action is telling you, okay, I had enough of going down. It's time for me to take a breather. It's time for me to switch, all right, to the uptrend. Okay, so every time you have a breakout of the uptrend, all right, there is a good chance, all right, that trend may change, all right. So you are betting that the trend will change, all right. Similarly, on the downtrend, if you can be plotting, all right, the downtrend, all right, like here, all right, it's the uptrend and it breaks, all right. So spot the break, because there is always a good chance, all right, the next couple of days it gets weaker the minute you spot the first breakdown. Simple strategy. You don't need a lot of, like I said, very complicated stuff. It is simple strategy that works. And go plot your trends on all the 30 DLC Hong Kong stocks, all right. And if you find a setup like this, it is a great setups, all right. So it's a simple setups, all right, that works. Okay, for example, all right, let me talk about China Mobile. I don't have a lot of time. All right, so remember that back in January, all right, there was a big sell-off in China Mobile, all right, and you saw that all the institutions were selling out China Mobile, and you see the huge volume in China Mobile, and everybody was selling. There was a big panic in the market, but I was calling a buy. Or I was calling a buy, because I believe this is the final capitulation, and I was calling a buy on China Mobile at $41 and to take profit at 44 and 50, and all these profit targets were met, so the people that followed me in this trade make quite a bit of money. And so where is China Mobile now? Okay, so this is the big picture of China Mobile, right? It has been on the downtrend for a long time, all right. If you compare China Mobile to Singtel chart, our Singtel chart, it is about the same. All right, it is on the downtrend for very long, all right, long suffering stock, I would call it, okay. And but could you see that China Mobile has started to break out from a long downtrend, and this is a stock that is giving you 7% yield, okay. So the market is coming off now, the whole Hang Seng Index is coming off now, but it will present you a good opportunity to get in China Mobile. All right, look at this level at very good support at 49.6, 46.27. All right, and these are the resistance level. But look at China Mobile for a longer term play, because it has just broken out. So today we see a little meltdown on Nasdaq and all that, and a lot of people are afraid because all these stocks are very frothy, and they have been overvalued and they have ran up quite a bit. But this is a stock that is on the reverse. All right, it is like going while every other stock was going up, it was going down, and it is starting to get back up again. Okay, so this is the Hang Seng Tech Index. It was just, you know, the Hang Seng Tech Index DLC was just introduced, and also the Hang Seng Tech Index also quite new. All right, and if you are trading Hang Seng Tech Index, right, we know that these are the core components: Meituan, Sanitech, Tencent, Alibaba, JD Health, you know, and Xiaomi, SMIC, and JD.com. All right, so these are the major components. You can know them. All right, so this is the new DLC on Hang Seng Tech Index, and look at it. All right, so this is Hang Seng Tech Index. Okay, and this chart, right, has correctly spotted the top. And if you have been on my chat group, I have been calling a sell on short on the buying the DLC short on the Hang Seng Tech Index when it picked somewhere off here at about 11,000. All right, so it's on the way down now. All right, and the Hang Seng Tech Index, all right, you know, there's a sell-off, and so this is not a sector that you have to be getting in, all right, now. But you know, we are in the digital age. The tech index is going to come back again. All right, it's going to come back again, and these are the two levels that I think the Hang Seng Tech Index could rebound: 8528, 88446. We could get a rebound, but I don't think that the Hang Seng Tech Index downtrend is over. All right, so it still has got some way to go, and this is Meituan, right? So Meituan is also amongst the tech plays, and you could see that you know, this trade plan correctly spotted it right at the top. And let me, okay, so my conviction buy for Meituan will be about between 272 to 296. All right, so I think Meituan will break this uptrend, all right, and hit towards 272, between 272, 290, 296, and it will trade range bound here, some trading opportunity here. But you know, if it breaks 272, then you have to be out of this stock. All right, so I want to share with you about you know, some catalysts that's coming out of Tencent. I don't have much time now. All right, you know, and it's about Naspers. Naspers is a largest shareholder of Tencent, and you know, back then in 2018, it sold 10 billion worth of stocks. All right, and Naspers indicated they have still got a lot of Tencent shares. All right, and they are, you know, they won't sell any more shares after they sold it in 2018, but they promised like 3 years of moratorium. All right, and you know, and it will end on 22nd of March. So the long short of it is that after 22nd of March, they will be unloading quite a lot of Tencent shares. So if you are trading Tencent, you have to be careful. All right, come March, all right, 22nd of March, this company has got quite a lot of Tencent shares, and they'll be unloading. All right, I don't have time to go through the details, but this is the Tencent chart. All right, he has got some way to come down. All right, you could see. So this is the first support of Tencent that it could bounce. All right, according to my trade plan, it could. So my target, the first stop, 638. But a great buy will be 558 when it goes there. All right, so China Construction, watch it. I mean, it is also a stock that is coming down for a long time, like China Mobile. So it is not is in a financial sector. All right, so this is a sector in play. Watch this stock. All right, it is on the verge of a major breakout of a downtrend. Okay, watch this stock. Yeah, so I have to go now. My time is up. I've overshot by a couple of minutes. All right, so find me on Trading Kung Fu. You know, I have some you know, index on Trading Kung Fu. A lot of people use my index to trade the Hang Seng DLC. All right, and also the Simski DLC. Or yeah. So a lot of people use this index. I have a lot of subscribers. They do day trade with my signals, all right, to trade those DLC. And if you want to find out more, tradingkungfu.com, key levels. And today, if you don't belong to any trading community, please join my trading community. Don't trade alone. If you want to know more about DLC, how to trade DLC for a living, all right, please join my trading community. Just go to www.robinhosmarttrade.com. You know, subscribe to my free video, robinhomarketchat.com. and this is my contact. All right. So if you need to know, to contact me, this is where I am. Okay. All right. So my time is up. Thank you everyone for joining me. It has been a great session. Thank you to SGX for organizing this session. Ethan.
Thanks, Robin. I think we have about a bit over 5 minutes left. Perhaps we can look at some of the questions that's on the website. Maybe I'll go first. I'm very excited to see a lot of questions on the DLCs. I'll try my best to answer as much as I can. So it's a very good question about should I buy a cheaper DLC or more expensive one? So if you look at, let's say, Tencent long or Meituan short, there is 3 to 4 DLCs that you can choose from. And the only difference for them are the price, the nominal price. So some are at 20 cents, some are at $2. So which one should I buy? Now, first of all, see, even there's 4 to 5 different DLCs on the same underlying with the same leverage. They all perform the same, meaning 5 times the daily return. So if the stock goes up 1%, okay, all these DLCs should go up 5% from their previous closing value. Okay, so in terms of the return, there's no difference. But the only difference is more on the sensitivity of the DLC's movement. So if you imagine the stock goes up 1%, the DLC goes up 5%, but 5% of a DLC, let's say, is trading at 5 cents. Okay, 5% of 5 cents is only like a 0.2 cent of a move. And which is only maybe a 2 ticks move on a 5 cent DLC. But for another DLC, let's say trading at $2, 1% move of stock, 5% move of DLC. So 5% of a $2 product, okay, it's going to give you 10 cents. Okay, so from $2 to $2.10. So you have 10 cents, which is equivalent to 10 tick move of the product, right? So what I would say is, should try to avoid the lower value ones, especially those under 10 cents, because every tick, it requires a bigger percentage for it to move. Okay, so if you see a stock moving 0.5% and the DLC at trading at 5 to 10 cents is not moving, it's because if you translate that percentage into a value, it equates to a very small tick move, right? So try to avoid the lower value ones. About Meituan DLC, I bought it at 30 cents. It went up $2. So I suppose what you mean is I did not take profit. Okay, so first of all, if a Meituan went up $2, the stock is now at about $340. So $2 move means about 0.6% of the stock move. 0.6% translates to 5 times leverage is 3%. Okay, so Meituan DLC long is now trading at about 50 cents. So for a 6% move of 50 cent product, it gives you about 0.3 cents. 0.015. So that's about 3 tick. So always think in percentage when you trade DLCs. Percentage of the underlying multiplied by 5, percentage of the DLC, and then use that percent to apply to your product at 30 cents. And then you get an idea of how much that DLC should jump, okay, should move. And so if you look at sensitivities and all that, okay, work around starting with the basic, which is percent times 5, gives you the percent return on the DLC. Finally, a lot of questions about whether DLCs are similar to options, whether there's time decay, things like that. So first of all, DLC is not an option. There's no optionality, no time decay, okay? So DLC is a totally different product that gives you a fixed daily return of the underlying, okay? But having said that, there are costs and fees if you hold DLC. So if you hold it overnight, there's always some costs which are explained in the term sheets, also is explained in the website, including management fees, some financing costs, hedging costs. But what's important to know is that these costs are very transparent. So they're all based on public reference rates, as well as values that are stated in term sheets. So anyone using their own calculation, you can calculate the exact cost of a DLC when you hold it for 1 day. overnight, and it will be charged on the value of the product. Okay, so it won't be charged in a statement like a stock brokerage fee. And the second point is, first point is transparent. Second point is actually not huge compared to the value of the product. If you hold it for 1 day, normally it will take about 5 to 8 days for it to go to maybe 1 to 2 tick difference of the value of the DLC. But what you should go is go to our website, go check out the product. At the bottom, there is a cost and fee section where it will tell you exactly how much the cost for you to hold the DLC for 1 day. Okay, so that's the transparency of trading DLC. So it's not an option, it's not CFD, which some of the questions been traded, and you cannot short because it's a DLC is like a cash product. It's like an ETF or like a share where you trade it, you buy, and then you've got a position, and when you can sell your position, right? So it's not like a derivative contract on an exchange where you can long, you can go short based on a margin, right? So it's very different. But I'll stop here on the questions. But I encourage everyone to go to our website, dlc.societegen.com. So I believe the organizer have left it in the chat there as well, and check out all the information. Robin, you want to handle some of the questions?
Okay, Keith, I'm not getting access to the question. Can you read to me some of the questions that I see?
Sure. Yeah. So one of the questions from Shelley, what indicators do you use in analyzing the trend? And I'll probably set the second question as well. They're asking, how long do you track the trend when you do the DLC trading? Do you track hours, days, or weeks? That's a question by Lim.
Just very quickly, Keith and Robin, I'm sorry that this is the only question we can take. So Robin, we only have 2 minutes left. So could you take this question, please?
Okay, very quickly. All right. So if you guys have known me, I'm like a veteran in the market, and I'm known for price action. So I read a lot about, for the price to turn, all right, I study a lot into the volume. I study into a lot of trends, and I supplement all those with a trend following indicator called the Ichimoku cloud. All right, so price action, studying volumes, when the volume breaks. All right, so for example, if you have lots of volume traded up there, like, the last couple of days, the Hansen index and the Hansen tax, all right, stocks, right, has got huge volume and it broke, all right. And, and then it not only broke down from like a high volume congestion area, but it also broke down from the trend, all right. So that to me is a very sure sign of it coming down. And then the Ichimoku cloud, all right, will be telling me that if it's coming down, is there a serious reversal of trend, all right? So that's a little bit a clue. My 2 minutes is up. If you want to know more about it, all right, contact me or just join me on my Facebook, okay? Thank you very much. Yeah.
Thank you very much, Mr. Robin Ho and Mr. Keith Chan. And if you'd like to hear more from them, they will actually be on at the 5 p.m. session. They'll be talking about 3 marketplace for 2021. You can be sure we'll be talking a bit about DLCs also. But right now, I'd like to encourage you to hit the button at the top of the page or go to the schedule for the next session by SGX's market strategist, Jeff Howie. It's going to be a short 10-minute session where he's going to introduce this whole array of investor resources available on the Singapore Exchange, the SGX. You don't want to miss that session. Click the button on the top of your page or hit the schedule to head to the 12:30 session right now. Thanks again.